Hi, I'm Bert Nussbaumer from macrobeat.co.uk. Well, just a few days to go for Christmas, and the year is really nearly over as well. And you know what kind of year we had. We were sort of trapped with two stories throughout the year, which was obviously the trade war and the potential trade deal between the US and China. And Brexit and the deadlock in the UK Parliament was really the other story that created a lot of flip-flops during 2019 and never really got the year going as such. In terms of the trade deal, I just want to say it looks to me that maybe it was a little bit disappointing that it's not the sort of big breakthrough, but I think we just may have to settle for this being the truce or a truce rather than it is, you know, a massive trade deal in itself. But I think for the global growth, for the global confidence, I think it's important that we have a truce between the US and China so that business can sort of start to plan again in a more optimistic way. Will it last all 2020? We don't know. But at this point into Q1, Q2 of 2020, I think it will, and it will create some confidence, no doubt. In the UK, obviously, we're going to have a Brexit vote today, so there's no doubt that we're going to be leaving the EU by 31st of January 2020. I think the only damper on the sterling side was when Boris Johnson made it clear that he wants to put it into law that there will be no extension to the transition period by end of 2020. So the no-deal risk has suddenly come back again, and that's maybe something that will be a little bit of an issue into 2020. But rather than showing you any sort of detailed data charts, I rather want to have a quick look into 2020. And on my first slide, we're going to have a look at the dollar index. Dollar index sort of peaked in October and started to sort of grind lower. We haven't really managed to firmly roll over yet, but I would think that into next year, I think the dollar will continue lower. Maybe Q1 will still be a bit of hit and miss, but I would just think we continue to grind lower. And over the year of 2020, I would really expect the dollar to be roughly 10% lower. Not the biggest of all moves, but that's mainly because we still have low yields in the rest of the world. But with a cyclical high maybe in the US economy, I would expect the dollar to readjust. On the next slide, we have the Aussie. That's just the one I picked out of all this dollar bunch. We do see the first signs of this recovery. We're breaking the one-year downtrend. This has been a two-year downtrend in the Aussie. And after having been short Aussie in 2018 as a dollar bull and a risk bear, I think I see signs that this trade is really reversing, and I see a good chance that Aussie will be among those currencies, especially with this truce between the US and China, which may benefit most if China really would manage to turn things around. On the next chart, just briefly a recap on what happened on the sterling side. We had this big run up in October, the first reprice when the polls showed a strong lead from the Tory party. Then the actual election night where we had a sharp move up to 135. The move back down is really on the back of this no-deal risk having been reintroduced by the UK government. Obviously, we have to wait and see how those trade talks go during 2020. So in sense of sterling, I could see a similar kind of flip-flop year as we had last year around Brexit. This time, we will probably trade around every headline that will come out when the trade negotiations are actually starting. So that's going to be a little bit of a rocky road. But if things go well, I think sterling is still undervalued. A chance for higher, which helps the low dollar trade as well. On the next slide, we have gold. Gold has been consolidating a lot in the last 2 months. We're now just at the sort of downtrend from the recent downtrend around 1481. Together with my view about a weaker dollar next year, I think gold will break out of this channel, will retest its 1550, and could actually progress even higher than that level during 2020. The last slide I have is the monthly Dow chart. You know, I've given up thinking about whether equity is top or not. They are in their own little world at this point in time. With the trade truce between the US and China, there's obviously still some room on the top side, and who knows, you know, it just seems like we can continue to grind higher at this, at least at the early part of 2020. This is it for me. Thanks for 2019. I wish you all a Merry Christmas and a Happy New Year, and see you again in 2020. Thanks very much. Bye-bye.